Mortgages, Airbnb, and the quiet squeeze. How Jamaica's housing market faces a stress test. By Jamaica Homes. Published on August 19, 2025. Jamaica's mortgage market is entering a delicate phase. Over the past few years, many returnees and local investors bought homes with the intention of listing them on short-term rental platforms. In tourism hubs, that strategy often worked. But in pockets of the island where visitor flow is thinner and car-dependent, supply has outpaced demand. Hosts there are pivoting to full-time rentals, sometimes all at once, putting downward pressure on local rents and straining cash flows for owners now carrying two mortgages, one abroad, one at home. If a global slowdown hits, some won't be able to keep both afloat, raising systemic questions for Jamaica's market stability. This piece lays out the risks and the practical mitigations, grounded in current Jamaican data and policy signals. No hype, no invented numbers. Where mortgage conditions stand? By regional standards, Jamaica's banking system remains well-capitalized, and loan quality has been stable. The Bank of Jamaica's latest Financial Stability Report, 2024, shows non-performing loans, NPLs, holding around 2.5% of total loans through 2024, a low level historically, with household NPLs broadly steady. That's the good news, and the baseline against which future stress would be measured. Lenders, however, are cautious. In the BOJ Quarterly Credit Conditions Survey, banks reported and planned tighter credit conditions into late 2024 and early 2025 to mitigate potential NPL increases. An early warning that underwriting is defensive when risk perceptions rise. On pricing, published mortgage ranges from a major local lender, Scotiabank Jamaica, sit broadly around 8.5% to 12.49% APR EAIR, depending on product and risk, illustrative of the cost of borrowing that investors face when short-term income underperforms. Rates vary by institution and borrower profile. Check current quotes. The Airbnb saturation problem and why it matters to mortgages. Tourism remains a pillar, with stopover arrivals hitting record levels this year, evidence that Jamaica's destination appeal is intact. The Jamaica Tourist Board reported the strongest July on record, up 16.5% versus July 2024 and 4.8% versus July 2023. Macro demand is healthy, but macro strength doesn't guarantee micro balance. Short-term rentals are highly place-sensitive. In walkable, amenity-rich districts of Kingston, Montego Bay, Ocho Rios, and Negril, occupancy can be resilient. In car-dependent or peripheral locations, guest frictions, transport, local knowledge, limited conveniences, reduce repeat stays, and lengthen vacancy gaps. Parallel to this, Jamaica is moving toward tighter licensing and standards for short-term rentals under the Jamaica Tourist Board (TPD-CO) framework, and public debate around new STR rules has intensified, signals that compliance costs and barriers may rise. When many hosts in a locality shift from short-term to long-term at the same time, the rental supply shock can push down rents, especially for mid-market units. Compressed rents meet fixed mortgage obligations, and for returnees with a second mortgage overseas, the math tightens quickly. Who is most exposed? Leverage plus concentration. Borrowers with high loan-to-value ratios and a significant share of income tied to one STR property are vulnerable to occupancy dips and rate resets. The BOJ's stance, tightening credit terms to preempt NPL growth, underscores lender awareness of this channel. Non-prime locations, areas with weaker tourist pull, or limited transport amenities tend to experience faster ADR, average daily rate, and occupancy erosion when new listings flood in. Yield snapshots from external trackers show movement over time. Global Property Guide, for instance, reported Jamaica-wide gross yields edging down from 6.73% Q3 2024 to 6.39% Q2 2025, directionally consistent with rising landlord competition, though coverage has caveats. Two mortgage households, returnees paying a mortgage abroad and in Jamaica face currency, interest rate, and income volatility simultaneously. One negative macro shock can challenge both sides of the ledger. What a global downturn could do. A global recession would likely pressure tourism-adjacent cash flows, short-term stays, ancillary services first. Even if Jamaica's stopover arrivals remain resilient relative to peers, small dips in spend or length of stay can move the needle for marginal Airbnb listings outside prime corridors. If owners then crowd the long-term rental market, the additional supply depresses rents further. At the system level, Jamaica starts from a position of sound bank capital and low NPLs, but credit tightening, already in train, suggests lenders are front-footing risk. Should walkaways rise in specific pockets, e.g. investor-heavy schemes, banks could see localized NPL upticks, less a systemic shock, more a targeted stress requiring workout and restructuring capacity. Practical mitigations that actually work. 1. Stress test the cash flow, not just the dream. Underwrite each property at conservative assumptions, off-peak occupancy, trimmed ADR, and a haircut to long-term rent. Layer in today's mortgage rate, shop multiple banks, and a reserve for repairs, JTB, TPD co-compliance, and insurance. If it still cash flows, you have a buffer. For benchmark rate ranges, see local lender schedules. Always verify the latest. 2. Decide on a primary strategy and stick to it for a full cycle. Flipping between STR and long-term every few months confuses the market and racks up friction costs. If your location isn't a proven STR node, lock a 12 to 24-month lease with solid covenants and priority on tenant quality. Move up the demand curve, medium-term and corporate lets. Where tourism is thin, 3 to 9-month corporate, medical, NGO, or BPO sector contracts can stabilize income at rates above standard long-term. Well-furnished, Wi-Fi reliable, generator or solar-backed units find takers in these segments. Price discipline beats vacancy bravado. A swift, market-aligned price cut can be cheaper than 2 extra months vacant. Track neighborhood list-to-let times and concession patterns. If several comparable units are offering 1 month free, meet the market early rather than late. Restructure before you default. Speak to your bank early about tenure extensions, switching from variable to fixed if available, or partial principal holidays. Jamaican lenders have demonstrated flexibility through prior cycles. They prefer performance to possession, and BOJ data shows they manage risk with tightening before NPL spike. Professional management and compliance. If you remain in STR, ensure JTB TPD code licensing and safety standards are in place, both to protect guests and to maintain platform eligibility as rules evolve. A competent local manager can lift reviews, response times, and occupancy. Build a real reserve. Aim for 6 to 12 months of mortgage payments, Jamaica plus overseas, in liquid reserves. No spreadsheet can replace the survival value of cash during a demand shock. Hedge what you can. If your primary income is in USD GBP, but the mortgage is JMD, be mindful of FX risk. Even partial natural hedges, USD-linked tenants, for instance, reduce currency mismatch. What to watch next? Policy and licensing for short-term rentals. Read the room. Public debate on STR regulation is heating up, and compliance expectations are rising. Credit conditions from BOJ. Continued reports of tightening signal lenders' collective risk view. A turn to easing would indicate comfort with the outlook. Tourism arrivals and spend. Record stopovers are supportive, but investor-heavy micro-markets can still saturate if supply grows faster than guest demand. Bottom line, Jamaica is not facing a mortgage crisis today. Banks are strong. NPLs are low. Tourism is robust. But in select areas, especially outside prime tourism corridors, Airbnb saturation is colliding with debt service realities, and the pivot to full-time renting is pulling rents down, just as 2 mortgage households feel the pinch. In a global downturn, that pinch could become a bruise. Investors and returnees can navigate this moment by owning the cash flow math, choosing the right strategy for the right location, and acting early with lenders and pricing. Policymakers can help by finalizing clear, proportionate STR rules that protect guests and neighbors without crushing compliant small hosts. Lenders can continue their prudent stance, flexible workouts where viable, firmness where not. The market's resilience will come from 1,000 small, rational decisions by owners, banks, guests, and tenants, made before stress compounds. In other words, do the boring work now so you don't have to do the painful work later. Sources: Bank of Jamaica Financial Stability Report 2024, Loan Quality, Systemic Resilience, BOJ Quarterly Credit Conditions Survey, Tightening Stance, Scotiabank Jamaica, Published Mortgage APR Ranges, Jamaica Tourist Board, Record July Stopovers, Public Reporting Debate on STR Regulation. Disclaimer: this article is for informational purposes only and does not constitute legal or financial advice. Please note, Jamaica Homes is not authorized to offer financial advice. The information provided is not financial advice and should not be relied upon for financial decisions. Consult a regulated mortgage advisor for guidance.